Is today's gold rally the start of something more, or is this just a bearish retest? I'm going to have all the details in today's video, including an update on my short position with key levels and targets. We'll also take a look at the DXY. Now, if you guys do want my help with your trading, be sure to click on the link at the top of this video, and it's going to take you to a page where you can sign up for our VIP group. And right now you can get 85% off lifetime access to that group. I just launched a new course that you're going to get full access to. So lifetime access to the course and lifetime access to our Discord real-time community where I'm in there every day helping traders. Plus, you're going to get daily videos that only members see, exclusive charts and setups, my help with your trading, plus you'll see my trades in real time. So click on that link in the description of this video. If you're on the website, click on the trading group link at the top, and you will be taken to a page where you can sign up. Okay, so let's take a look at gold because I did mention this over the weekend, so I do want to provide you guys with an update here for XAUUSD. Okay, so looking at this daily chart, this might be a little bit confusing because where does this level up here actually start? And if I move out, you can see that this is an ascending channel off of this high from back here in December, and we clearly have two lows back here that satisfy this equidistant channel. Okay, so these two levels run parallel to one another. And what's really interesting about this is that back here, we saw gold break out and find support here on a couple of candles. So I talked about this over the weekend, and the idea here was I was getting short last week, okay, up here in this area, which I'm still in. It's in profit now, but this red candle that you see right here had not happened as of the last video. So the reason I was looking for a pullback, okay, there were a couple of factors that we talked about in VIP at length in real time, but the reason I was looking for a pullback up here was there was a breakdown intraday on the 4-hour chart that I shared with VIP members, but this move up here, okay, this move above this level, this is an ascending level, clearly, right? And we had an upside break of that level. So a lot of times, upward breaks like this of ascending levels do tend to fail. So this right here is now a failed breakout given that we've had several daily closes below that level. Okay, so you can see where gold tried to find support here on a couple of candles, which it did. However, all of this through here was just consolidation. You could see where bulls were starting to fatigue up here, and we got the close below on Monday. Now, since that time, it's no coincidence that we are seeing this level come in as resistance. So look what we had here on Wednesday. This high right here touched right off of that level. So support back here, support once again, and now it's flipped to resistance. Okay, so today took out yesterday's high. No surprise there because this is just consolidation and gold loves to do this, loves to take out these highs like this. But before you go getting too bullish on gold, you've got to understand that 2350, okay, this area right through here is going to be a significant factor for bulls to reclaim. If you're bullish on gold through here, right, you are essentially buying right into resistance because this level failed on Monday. So again, that means that, old support becomes new resistance, which is what we're seeing right now. So 2350 is going to be the line in the sand, in my opinion, and that's really going to dictate where gold goes here over the coming days. Okay, so as long as the market is below this, I do think that we could see a further pullback from gold. Now, at the same time, though, you've got to be careful trying to short through here because even though I'm in a short position that's well in profit, I've locked in that trade so that it's really a risk-free trade at this point. So you've got to be careful shorting through here, though, especially on a candle like today's. So what I think that we could see is, given today's candle, I think that what's more likely, instead of seeing the market close here and just rotate lower, if we are going to get a deeper retracement from gold, I would be looking for a sweep of even today's high. So you've got this low right back here and also these highs. Okay, so there's an area right through here that we could see the market come up here and tag just above 2350. So we could see the market come up here into this big red candle to fill in that imbalance a bit more before we get a rotation lower. So this is not an endorsement to go short gold. It's never an endorsement to trade anything because it is just my opinion, of course. But I do think, though, we could see a sweep of this high given today's candle. Okay, so I want to make that clear that I don't think that right this moment is the time to go short gold. I think you've got to stay patient here if you are looking for a short and see if we get a sweep up there into that imbalance from April 22nd. Okay, now alternatively, of course, if gold were to close back above 2350, so if it were to close a day back above this key level up here, all right, so either today or tomorrow, if it were to close back up here, then we have the market, back above that key level going into the weekly close, and that could be bullish for gold back there toward those highs. Okay, so I'll keep an eye on this one. Obviously, if we get the close back above this level, I will be out of my short position. But again, that short position from up here is well in profit at this point. Now, I do want to mention the DXY, the US dollar index, which, by the way, guys, if you do enjoy this content, be sure to smash the like button, also subscribe to the channel. So looking at the DXY, right, this typically matters for gold because the two, or at least what we've come to know, is that the two move inversely to one another. And right now, the DXY is still holding within this channel. Okay, however, it is starting to get a bit what we call heavy, right? The market is starting to pressure this level down here where we saw a retest down here, a slight bounce. And so far, the market is back to it once again. It even tried to rally right here on this candle, this 4-hour candle. And once again, it failed. It's coming right back there to the level. So this is starting to look a little bit heavy here for the DXY to the point where we could get that breakdown of this area potentially today. So this is something to be aware of because if this does fail, okay, the bottom of this channel here, then we're looking at a move back there toward the 105 support area. And that really becomes a must hold for bulls because this level has been so significant that obviously a sustained break back below would start to look very bearish for gold for the rest of this year, or at least for the next couple of months. So 105 is going to be a must hold there for bulls. We do still have the market technically holding above this channel support, but again, it is starting to look a bit heavy up here with the market unable to rally from that level. Okay, now the thing is, if you're looking at this and you're saying, well, if the DXY looks bearish or at least heavy here, wouldn't that be bullish for gold? And yes and no. Typically, that would be the case. However, if you look at the relationship here between the two, looking at the DXY versus gold, so we've got the DXY in orange and gold in blue. If you'll notice, typically, we do get the two moving inversely to one another. So you can see back here, right? Obviously, one's moving up, the other's moving down. Same thing over here, right? They're moving inversely to one another. However, what's occurred recently over the last couple of months is we have seen kind of the opposite take place, where you can see that right back here, okay, starting in early March, we have the two almost moving together. So this is something to be aware of because the standard relationship that we've come to know, at least the majority of the time, has kind of flipped because, again, this back here in March, you can see where the two are moving essentially together, right? Whereas before they used to move inversely to each other. So just something to be aware of that if you are seeing the DXY start to break down, don't just automatically assume that that is going to be bullish for gold. It could, because that relationship, that inverse relationship could come back and it will come back eventually. But right now, just know that over the last, let's say, 6 to 8 weeks, the two have been moving together. Okay, so a bearish dollar doesn't necessarily mean a bullish gold right now. It could actually pull gold lower. Okay, so all things to keep in mind. But as for gold, as for the technicals, just to kind of wrap up here, we do have 2350 being the area to watch. So this is going to be critical on a daily closing basis. If we see gold trade back up here on the daily, then that would be bullish back here toward these highs. Of course, if we see the market rotate lower and take out levels like 2300, then that would be bearish. Okay, so, speaking of support here for this market, you've got 2300, which you can see here. This is where gold has found support. You can see this low right back here, the highs before that breakout. And so far, this level has held up as support. So it would take a daily close below this area to expose levels like 2265. You can see we've got this little pivot right back here. And below that, we have the 2200 area. Okay, so it's unclear if we are going to see a move back down here in this area. This is my final target, though, which could change, though, again, if gold were to reclaim 2350. But the reason this down here is my target, and it was my target even when I got short up here in this area, the reason this is my target is because of the imbalance from this candle. So clearly 2200 is a significant level, plus you can see that this breakout candle back here. Okay, so let me clean this up. This big green candle right here, this one did not get much of a retrace. The very next candle opened, retraced, a very small portion of that previous candle, and then just took off. So there is an imbalance down here just above 2300 that could become a target if we do see this area around 2350 hold up. Subscribe to the channel and click the bell icon for notifications. Don't forget to join us in VIP. Save 85% on lifetime access. Click on that link in the description of this video, or if you're on the website, click on the trading group link and you will be taken to a page to sign up. Trade well out there, and I will talk to you again tomorrow in the weekly forecast.